What's up, everyone? Gus here from the Mind and Liberty channel. The US government is seriously considering creating a strategic reserve of Bitcoin and other cryptocurrencies. The likelihood of this scenario materializing increases daily, with an official announcement possibly coming as soon as this Friday, March 7th. We could be facing a historic event. Recently, various news and rumors have circulated, including statements from President Trump, causing significant market volatility. It's essential we fully understand the context, what this strategic reserve means, its feasibility, and potential implications for Bitcoin and other crypto assets. On March 2nd, President Trump posted on his social media, "A US crypto reserve will boost this critical industry after years of attacks by the Biden administration. This is why my executive order on digital assets directed the Presidential Task Force to move forward with a strategic crypto reserve, including XRP, Solana, and ADA. I'll ensure the United States becomes the crypto capital of the world. We're making America great again." This statement caused confusion in the market. It is unusual for a president to directly promote specific tokens that aren't even leading assets. Many analysts became skeptical, particularly due to the apparent conflict of interest. The impact was immediate. XRP surged over 30%, Solana rose significantly, and Cardano saw gains up to 70%. Bitcoin advocates strongly criticized this situation. The specific mention of these smaller tokens over Bitcoin seemed inconsistent with the purpose of a national strategic reserve. Later, apparently correcting his previous remarks, Trump stated, "Bitcoin and Ethereum, which are also valuable cryptocurrencies, will be central to this reserve. I also appreciate Bitcoin and Ethereum." This follow-up boosted Bitcoin's price. These announcements had a substantial impact on the market, which had been trending downward. Ethical questions remain about a president directly influencing markets by making explicit statements about specific assets. David Sachs, recently appointed to oversee cryptocurrency affairs, publicly announced on March 4th that he had sold his stake in a fund called Multicoin and liquidated all his crypto investments prior to taking office, aiming to eliminate potential conflicts of interest. A significant upcoming event is a meeting scheduled for Friday at the White House, a first-of-its-kind gathering focused exclusively on cryptocurrencies, with President Trump hosting. David Sachs, the event organizer, confirmed attendance by prominent founders, CEOs, and investors from the crypto industry. Sachs also sought to clarify the president's previous remarks, stating, "The president announced that the strategic crypto reserve will include Bitcoin and other major cryptocurrencies, consistent with the initial executive order. The president remains committed to making the United States the global crypto capital. More information will be released during the meeting." These developments sparked renewed optimism, with Bitcoin momentarily surpassing the $90,000 mark. Commerce Secretary Howard Lenk, known for his pro-crypto stance, stated that a strategic Bitcoin reserve is an initiative of personal interest to the president discussed during his campaign and will be implemented this Friday. Lenk added, "The strategic Bitcoin reserve will be announced at the White House meeting, and other tokens will be discussed positively but distinctly. This suggests Bitcoin and other tokens will be integrated into the strategy differently." Now let's address the key question. Is there logic in creating a strategic reserve of Bitcoin or other cryptocurrencies? The answer depends on the specific purpose of this reserve. If we view this initiative as a government-managed innovation fund with a specific limited scope, including Bitcoin and other cryptocurrencies, could be justified. However, if considered as a sovereign wealth fund, questions arise regarding the appropriateness of investing public resources in highly speculative assets whose long-term survival is uncertain. The most rational approach would be a Bitcoin-specific strategic reserve managed by the US Treasury or the Federal Reserve. Tokens like XRP, created without robust economic foundations and controlled by private entities, or Solana and Cardano, with relatively centralized structures, would be unsuitable for a national strategic reserve. Even Ethereum, despite its position as the second-largest crypto asset, possesses distinct characteristics compared to Bitcoin. Bitcoin remains the only truly scarce, immutable, decentralized digital asset, sharing similar properties with gold. A strategic reserve primarily makes sense as an alternative backing for the dollar, providing a secure asset for the digital age, potentially complementing or even replacing gold's traditional role. Critics argue that as issuers of the dollar, the US has no need for gold or Bitcoin reserves. While valid today, will this premise remain true decades from now? Will the dollar's status as a global reserve currency remain unchallenged? From a strategic perspective, it would be prudent for the US to hold an asset serving as a universally acceptable insurance policy. This rationale explains why gold remains stored in US Treasury vaults. In the future, Bitcoin could serve a similar role, with the added benefit of digital superiority in custody, transfer, and security compared to gold. Strategically, it would be advantageous for the US to begin building a Bitcoin reserve at current values rather than decades later at potentially much higher prices. In the medium term, this reserve could strengthen the dollar's role as the global reserve currency. Over the long term, as Bitcoin potentially consolidates, a hypothetical scenario, not a certainty, it could emerge as a complementary or alternative global monetary asset to the dollar, ironically benefiting the United States. America's rise as an economic superpower wasn't due to currency issuance or depreciation, but rather a stable monetary policy based on sound money, initially silver, then gold. A return to a non-inflationary asset like Bitcoin could theoretically strengthen the American economy. Examining market indicators, we note that despite recent price appreciation, market sentiment remains cautious. The Crypto Fear and Greed Index currently indicates levels near extreme fear, suggesting limited investor confidence. Analyzing the MVRV, market value to realized value indicator, essential for identifying market cycles, we see moderate values that don't suggest excessive euphoria. Historically, values below 1.5 indicate favorable entry opportunities. Thus, the current scenario doesn't suggest extreme overvaluation. However, given typical market volatility and the possibility that many investors have already anticipated recent developments, substantial further appreciation would depend on significantly positive, unexpected announcements at Friday's meeting. Importantly, Bitcoin's long-term adoption and valuation are not primarily dependent on government actions. Historically, Bitcoin has developed and expanded despite, not because of, government regulation. I hope this analysis has clarified these topics. We'll continue closely following developments on this fascinating intersection of technology, economics, and geopolitics.